I would now like to invite the Director of IBA, Dr. Ishrat Hussain, and former Governor of State Bank of Pakistan to deliver the presidential address on this occasion.
I'm privileged to be sharing this podium with one of the distinguished scholars of Islamic economy and finance. As a matter of fact, whatever little I have learned is from his books and from his research and from his contributions. So in fact, I'm a student of Dr. Umar Chopra, and therefore, if I make any errors, they will be all mine. If there is any credit, it goes to him. I also want to pay my tribute to Mr. Khurram Murad, who I knew as a student when he was working with Professor Khurshid Ahmad, who was at that time Nazim-e-Ala of Islamic Jamiat al-Talaba, and Dr. Khurram Murad, at that time a student, was his number two. I have great respect for his integrity, competence, and sharp intellect, and I still have very fond memories of him. So it's a very nice of Sohaib to start the series in his memory, and I hope that he continues this tradition to honor this distinguished person. I would not like to repeat what Dr. Chopra has stated about the global financial crisis, but let me submit to you that the causes for the origin and the consequences of this global financial crisis have to be further analyzed and researched before we reach any definite conclusions. If you look at the history of all the previous financial crises, starting from the Latin American debt crisis, then followed by the Mexican debt crisis, then the Asian crisis of the 1995-96, then the Russian crisis, we try to fix the problem which had originated at the time of the crisis. And we think now we have done our job and we are quite comfortable that this will not happen. The next crisis arises not because of those factors which we have brought under control, but something very, very different. I, for one, could not imagine that a sophisticated banking system, such as the US banking system, would be lending its money of the depositors, which is a money in trust, to the borrowers who fail all the tests of creditworthiness. And that is how this whole thing started. When you have the house ownership as a dream of the US population, the macroeconomic policies induce a low interest rate environment because Chinese were selling their goods to the US and accumulating dollars, which they were lending to the United States. So the US consumers were better off because they were buying goods at a much cheaper price, and therefore the purchasing power was quite relaxed. So they were not saving to the extent that once you reach the point where the banking system has lent all its money to the creditworthy borrowers, now what do they do? They go to the uncreditworthy borrowers. And what is the economic rationale for that? In the originate and retain banking model, you start the process of screening of the clients whom you're going to give the money. You make sure that they have the repayment capacity, that they can pay the installments over time. So the responsibility for the default or the non-performing asset is that of the bank which has originated the loan. But when you have the slice and dice securitization, where you bundle up all the loans and sell them off to the insurance companies, to the hedge funds, or to some other companies, you don't care whether the loan has been given to the right person or not. And this was a regulatory gap which arose in the US system. Well, the banks are being regulated by the Federal Reserve, by the Securities Exchange Commission, by the Office of the Comptroller of Currency, and the Federal Deposit Insurance Corporation. In addition, the state banking supervision, all the investment banks, all the hedge funds, all the other private equity funds, we call them shadow banking system, were not regulated at all. Economic conditions were in a downfall or a downward trend, and when the subprime borrowers could not pay the installments, those securitized loans could not be serviced, and their market value declined, because under the US accounting laws, you have to mark to market all your assets. And therefore, this started the Lehman Brothers, downfall. So what is a lesson which I draw from this particular example? That you might be regulating one part of the system, but if you leave another part of the system completely free of any regulation and supervision, you cannot be sure that the entire system will remain stable. So for the stability of the system, you have to have the entire financial system completely under the wrap. And that's why the banking sector in Pakistan, which is 95-96%, was regulated and supervised by the state bank, and which did not allow any kind of these exotic instruments like the derivatives and the credit default swaps to the banks, were protected. Same in India, same in China. So we can show to the West that our regulatory and supervision system was more sound, and it was able to forestall the wrath which the US and the Western banks had to go through. Can you imagine that trillions of dollars of public money was put at the disposal of the financial system, taxpayers' money, while our banks were making contribution in forms of taxes and dividends to the governments of these countries? That's the contrast between the two situations. Now I come to the Islamic finance. As somebody who takes pride in putting Islamic banking in Pakistan 8 years ago, I'm not a very happy person, and I'll be very honest about it. Here was a perfect opportunity for the Islamic finance to provide an alternative to the conventional banking system. That this conventional banking system is unstable. It's costing taxpayers a huge amount of money. And here is an alternative system which is inherently stable, and as Dr. Chopra pointed out, because we do not allow the sale of the debt or securitization or creating money after money and having a complete pyramid structure. You link your assets and your lending with real sectors and with a real asset formation. This is the superior system compared to the conventional banking system. This was a perfect opportunity for us in the Islamic banking system to be able to overtake the global finances. Well, we haven't been able to do it. And this is a question I want to raise to the scholars, to the practitioners, to the Sharia scholars, as to why we were not able to grasp this opportunity which was God-given to us. I'm no scholar, and I am just a very humble student of Islamic finance. My own hypothesis is that we have not offered the whole range of products in Islamic finance which the markets demand or markets need. So there is a gap in our product offering. We are not able to meet the demands. We are still stuck with murabaha, musharaka, mudarba, and some ijara. That's not how the real world operates. The world has many complex demands on the asset side, and we have not been able to cater to the needs by creating the innovative products which the Islamic finance can take over from the conventional finance. My second hypothesis is that the transaction cost of a Sharia-based transaction, banking transaction, is extremely high. You have to go to the Sharia board for getting approval of each single transaction. They are not off-the-shelf products which are standardized, which can be taken off very quickly, put in place, and therefore a businessman doesn't have the luxury of waiting for 2 months or 3 months and incurring the costs, and he therefore says, sorry, I'm not going to wait for the Islamic finance, I'm going to the conventional finance. And unless we standardized the Malaysian standards, the Bahrain model, the Pakistani model, the GCC model, because the cross-border transactions cannot take place because every Sharia scholar has a different interpretation of the Islamic nature of that transaction. And I think this, to me, is a major hurdle and inhibiting factor as why we cannot take over. Third, the legal underpinning and the case laws for arbitration, for mediation, for alternate dispute resolution are unclear. Whether we go to the civil courts or whether we go to the Sharia courts, we go to the appellate bench of the High Court, or we go to the Federal Sharia Court, whether the civil law on the foreclosure will be applied pari passu for the Islamic products or not, we just do not know. So this lack of clarity on the legal status of the underlying transactions, in my view, is another inhibiting factor, which is not allowing Islamic finance to be spreading like a wildfire, where there was a vacuum which could be created, which could be filled. And my fourth hypothesis is that we lack trained human resources in Islamic banking. People who have the knowledge of banking, finance, Sharia and Islamic jurisprudence are very few, not only in Pakistan, but in all Islamic countries. And Pakistan alone according to the State Bank's estimates, requires 11,000 plus trained Islamic finance professionals. And we do not have either the institutions or the certification, like you have the Institute of Chartered Accountants, you have the ICMA, which provide now CFAs, which provide the certified professionals. We don't have that kind of what I call as the learning environment, which produces both on the academic side as well as the professional side for the Islamic finance. So I'm an unhappy person because God had given us an opportunity where we could have established the superiority of the Islamic finance over the conventional finance, but it seems we have missed that opportunity. And that is what I would leave the thought with the scholars like Dr. Chopra to think about this and see if we can prepare ourselves for the next crisis. Thank you very much.
I would now like to ask Dr. Hassan Sohaib Murad to present a memento to Dr. Ishrat Hussain for gracing this auspicious occasion.
आप ही आ जाएं। छापरे साहब की जगह आप मुझे मेहनत उन्होंने की और फल मुझे मिल रहा है।
With this short ceremony, we would like to conclude our lecture, and I would like to thank all of you once again, Dr. Umar Chapra, Dr. Ishrat Hussain, Dr. Hassan Sohaib Murad, for taking your time out and coming here today. Thank you very much, sir.